Hello, everyone. This is Ty Kiesel with NAV. I'm really glad to be here today. We are going to talk about two of the most popular types of small business financing that exist for business owners, small business loans and business credit cards. I think these are both great options for a lot of small businesses. You've heard me say before, I think we have more options available today than ever before, but I think it's incumbent upon us that we understand what they're good for and what they're maybe not good for. So let's dive in here. The basics: a small business loan is a lump sum of money that you borrow. You'll get it all at once, and then you'll pay back typically a fixed interest rate over time. It could be a loan term of, a few months or several years. It just kind of depends upon the lender, the type of loan, etc. Now, business credit cards are a little bit different. It's a revolving line of credit that you can use, pay off, and use again. And you only, instead of paying interest on the full limit of your credit line, you pay interest on only that credit that you use. I'm a huge fan of business credit cards for a number of reasons that we'll talk about here in just a few minutes. Let's talk about business loans first. A business loan is great for a lot of reasons. You can pay for a large expense, like maybe buying a piece of equipment, renovations on your business, maybe relocating your business to a new location. You can buy equipment and inventory with it. Now, although a bank loan or a business loan will do all of these things, in many instances today, there are specific business loans designed for these specific purposes. For example, there are business loans designed specifically to buy equipment. There are businesses of varying and different term lengths that could impact what how you use it. For example, buying inventory may require a shorter term loan than, say, buying a piece of equipment. So, you kind of need to think about what your loan purpose is, but generally speaking, small business loans are great for paying for large expenses. You can also expand or buy real estate, new construction expansion, or you can purchase land, or you can purchase a new building, or you can expand your building. Commercial real estate loans are really great for these kinds of things. Also, that you can consolidate other debt. For instance, over the last, I would say nearly 20 years, there have been a lot of short-term small business financing that includes daily or weekly direct debits. You can actually, if you've got a good personal credit score and your business credit profile is strong, you can actually consolidate that daily, weekly payment type of debt into one loan with a lower interest rate and maybe stretch out the term a little bit so that you can make the cash flow burden of all of those smaller daily payment loans a little bit easier to swallow. Business credit cards, on the other hand, are really great for, ongoing expenses, like those times when you need a little extra working capital. Maybe you're traveling with your business, you're buying supplies. It's typically think in terms of predictable uses that you can repay quickly. Business credit cards are very convenient because they allow you to access capital immediately. You can use that card depending upon what your limit is. Even use the business credit card to purchase inventory or things like that. But ongoing working capital related expenses, a business credit card is really a great option. You can also use those funds for Emergencies, rainy day funds. It can be good to have a business credit card on hand for unexpected expenses. For example, years ago, we had in a small business I was in, we had some plumbing issues that cropped up and had to repair the plumbing from the business to the street, and that's not something that we had anticipated for, but access to funds quickly, like a business credit card, are great for those kinds of expenses. And it's also good for paying some startup costs. Let's say, for example, you win a new contract with a new customer and you need to ramp up employees or equipment to be able to service that new contract. You can use business credit card for that. Also, because credit cards largely, whether business credit cards largely look at your personal credit score to determine whether or not they're going to offer you that loan. If you've got a good or excellent personal credit score, you can actually use a business credit card to pay startup costs for getting your business off the ground. So there are lots of really great short-term uses for business credit cards. And actually, that's one of the reasons why I like them so much, is because you don't have to have 2 or 3 years in business to get a business credit card. You just need to have a reasonably good business credit profile. Now let's look at interest rates, some of the qualification criteria, and some of the amounts that are available. Typically speaking, the APR for a small business loan is going to be a little bit less. And this is all dependent upon the lender and your business credit profile. You can expect interest rates as low as, low single digits in this, 4% or so, to much higher. 90% is probably a good thing to consider, but some loan products go even higher than that, depending upon your business credit profile and your personal credit score. Remember, there is a correlation between how easy the financing is to get and how much it costs. For example, typically speaking, if you are a highly qualified borrower with a really strong credit profile, you will probably pay less than someone with a marginal credit profile. So you want to just remember that there is a correlation there. Credit cards are going to be a little bit more expensive on the low end, a little less expensive on the high end. You can expect to pay between 7 and 30%, depending upon the credit card, depending upon the offer. You can actually get credit cards with introductory rates as low as 0%. So, there's lots of options there. To qualify for a small business loan, typically speaking, you need a strong credit score, strong business credit profile. You need, depending upon the lender, there are revenue requirements that you're going to need to meet, and there are going to be time in business requirements. Now, that being said, there are lenders who will give you a small business loan if you have at least 6 months in business and $100,000 in annual revenue. However, those are going to be more expensive than if you had several years in business and $500,000 or $1 million in annual revenue. When they're looking at your business credit card application, they're just looking for strong credit scores, typically your personal credit score. The amounts that you can get they vary anywhere from $5,000 to $5 million for the average small business loan. Some lenders go more depending upon your credit profile, but if you look at the average small business owner that we see at NAV, for instance, is borrowing somewhere around $45,000 with a small business loan. There are those that do more, and there are some that do less. Typically, banks want to see loan amounts in the range of $500,000 to $1 million or more. So depending upon the lender you go to and how much money you're looking for, there's probably going to be a small business loan that'll meet your needs. Typically speaking, a business credit card is going to have a max up to about $50,000. And that's going to depend a lot on your credit profile, the credit card provider, and your business revenues probably. So, for example, don't expect to go as a startup to go in and get a credit card that's going to have a $50,000 limit. It's probably going to be less than that. And there are some strategies to making business loans work for your business. I look at small business lending, and I try to encourage business owners to be very strategic in how they approach their financing needs. The further out you can plan, the better. I like to suggest that at the first of the year, look ahead, look ahead to the next 12 months to get a feeling for just exactly what the business may need in terms of financing. I spent a lot of years in a business that wasn't seasonal by the traditional definition, but business did ebb and flow. So I had to plan for when the lull was going to be and how I was going to allocate funds from the busier times when revenues were greater, so that I could kind of smooth out my cash flow requirements. And so, as you look at your business from the annual perspective, think about those times where business is going to be better, business may not be as good, and you may need a little extra capital to bridge those slack times. And the time to apply for financing is not going to be in the middle of the slack time. You want to think ahead so that when you've got, several months of strong revenue, you can apply for the loan then to carry you over the month or two that may be a little bit slower. Typically speaking, expect the lender's going to want to see your business bank account information so that they can look and see what your average is for maybe the last 3 months, maybe the last 6 months, depending upon the lender. And so the time to apply is actually before you need those anticipated funds, rather than being in a crisis mode because now you need them all of a sudden. And also try to have a direct use in mind for the loan funds. In other words, your loan purpose is really going to matter when you're looking at borrowing. There are some types of financing, like we mentioned earlier, equipment financing, for example, that are specifically designed for different use cases. And if you are able to match the use case with the type of financing that's available to you, you may actually be able to save a little bit on interest rate. The qualification criteria might be a little bit different. Equipment financing, for example, is going to leverage the equipment you're buying as collateral. So it's a little bit easier to qualify for than just a general small business loan. So be thinking in terms of, what am I borrowing for? It's also going to help you know how much to ask for. I like to say loan purpose drives everything. Loan purpose, what you're borrowing for, is going to tell you how much money you need to borrow and what kind of loan terms you need. Do you need short-term or long-term loans? A good rule of thumb, generally speaking, I believe, is you want borrowed money to return $5 for every dollar you're borrowing. So if you're looking at the ROI of a particular project, you can determine how much interest you can afford to pay based upon that type of a metric. I'm personally of the opinion that you borrow to improve ROI on a particular project, or you borrow to improve the value of your business. When you start expanding beyond that criteria to determine if it makes sense to get a small business loan, you need to be really careful that you don't borrow yourself into trouble. So you need to understand how the funds will impact your bottom line, and you want to make sure you have a plan to repay them. Traditional lenders are going to ask for a pro forma so that you can show them how you plan to repay their loan. Online lenders and other alternative lenders may not ask for that, but whether or not the lender asks you for how are you going to repay the loan, you need to be thinking in those terms to make sure that you're prepared for the loan payments that you're going to have to make. Credit cards you can use a little bit differently. If you're looking for a new credit card, kind of determine how you anticipate using it. Do you travel a lot? Do you use a lot of automobile travel or truck travel so that you're using a lot of fuel? Look for rewards cards that will enable you to earn rewards on the type of normal business expenses that you're doing. This is a great perk because it allows you to get a little bit back, whether it's a money back or a discount on office supplies or travel rewards or whatever. Think a little bit more strategically about the business credit card that you're applying for, and does it fit with the type of business expenses you're going to have so that you can leverage the card to earn additional value. I'm not a fan of just using credit because you have it available to you. I like the idea of using credit when you need it and make each and every payment on time. One of the benefits of business credit cards is it will help you build and establish business credit, but only if you make your credit card payments on time. And there are some things you need to be aware of that are a little bit different with business credit cards than with personal credit cards. For one thing, and this is a very important thing, the Credit Card Act protects consumers against odd billing cycles and things like that, so that you get your credit card bill the same time every month, and you have 30 days to make those payments, and it's very predictable, and it's easy for you to manage. Business credit cards are not required to do that. So depending upon the card provider, many business card providers, they still treat business credit cards the same way as your personal credit cards, though they are not required to. So you want to pay attention to when you get that business credit card statement, don't just drop it in a drawer thinking I can pay this at the first of next month, just like I pay my personal credit card. You need to pay that on the due date that is noted in the business credit card statement. If, for example, you have a zero interest introductory rate, if you pay that business credit card a day late, you can lose that introductory rate, suffer a penalty for it, and your interest rate will go straight up. So you want to make sure that you're paying attention. I know of some small business owners who have experienced that with a business credit card payment that was posted at 12:01 the day after the business credit card was due. So you want to be very aware of that. It's not really a big problem. You just need to pay attention to it. And that 0% APR can be a really great tool that you can use if you use it strategically for things that make sense for your business. But then again, like I said a minute ago, use it for what you need, and always have a plan to make timely repayments. So, how do you choose the right one? You want to consider your use for the financing. If you're comparing a small business loan to a business credit card, is this a one-time expense, or is this going to be an ongoing need? An ongoing need is not necessarily met very well by a small business loan, but it could be met very well with a business credit card. And then you need to look at your qualifications, and let's suggest that you have a real honest conversation about what your credit profile is, how much revenue you have, what your ability is to repay a small business loan, And there may be some things that you just can't get a business loan for because your qualifications are weak. Now, the good thing is, if you have holes in your credit application that maybe you need to strengthen your business credit, you can use a business credit card to do that. And you can also visit nav.com and learn more about how to build your business credit and how to improve your qualifications so that you can better get yourself better qualified for a small business loan in the future. And also, when looking at the different loan options available to you, you need to ask yourself, how quickly do you need the funds? Some loans, for example, it's not uncommon for an SBA loan, which is probably going to be about the lowest interest rate and the most friendly terms, it could take a month or two to get through the loan process. On the other hand, it may cost you a little bit more for the financing, but there are loan options available online where the application can be completed in a few minutes. You can get an answer on your loan application often that day, and typically within the next day or two, you can have funds deposited in your account. So depending upon how quickly you need the funds, that's going to impact where you look. So these are questions you need to be asking yourself before you start looking for a lender. So how do you get started? Well, we can help you with that. See what funding options you currently have in your NAV account, and they will include both credit cards, small business loans, and other types of financing, like maybe a business line of credit or something along those lines. You can understand your qualifications and help identify those areas where you need to improve so that you can get ready for the next small business loan application. And if you would like, NAV will provide you with matches so that as your business grows, those matches will increase, and the better qualified you are, the more options you're going to have. And just be aware, NAV does not sell your information to anyone, but we use that information to help you determine what's going to be the best fit. Like I said in the very beginning of this presentation, I think there are more financing options available today than ever before. There was a time when the only real option you had was to go into the bank, and that is still a great option if you qualify. But there are lots and lots of other options for different loan purposes and different borrowers that you should be able to consider. So just because you get turned down at the bank doesn't mean there isn't a loan option available for you, and we can help you find it. I hope this information has been very valuable to you. You can learn more about the credit card options available to you or the small business loans available to you by visiting nav.com. And if you use nav.com's matching process for credit cards, for example, you're 3.5 times more likely to get qualified or get approved for a business credit card. So thank you very much. I hope this was very valuable to you, and I look forward to the next time.